Hello and welcome to AI Market News by LM. It's been one of those totally upside down weeks in the markets where bad economic news is somehow, some way, fueling a massive stock rally. So what in the world is going on? Well, we're going to break down the two huge forces at play here, a potential massive pivot from the Federal Reserve and this incredible tectonic shift in the AI race that's creating new winners and losers, like almost overnight.
All right, let's kick things off with the story that's pretty much driving everything, and that's a potential leadership change at the U.S. Federal Reserve. Seriously, this is the single biggest catalyst for the market right now, and it all boils down to just one name. So based on the prepared resources, the frontrunner to be the next Fed chair is Kevin Hassett. And the reason the market is reacting so strongly? Well, his appointment would signal a massive policy shift. The key question then becomes, a shift toward what exactly? Okay, so it all comes down to this difference between being hawkish versus dovish. A hawkish Fed, right? They fight inflation with higher interest rates, which kind of slows everything down. A dovish Fed, that's the complete opposite. They're focused on stimulating growth, and they do that with lower rates. Hassett is seen as being firmly in that dovish camp, and that's exactly why Wall Street sees his potential appointment as just pure rocket fuel for the market.
And listen, this isn't just some wild speculation. We've got weak economic data just pouring gasoline on the fire. Get this, consumer confidence just hit a 7-month low. That is a huge signal that the average person is really starting to feel the pinch, and that in turn makes a rate cut way more likely. As a result, the market is now pricing in an 80% chance, 80%, that the Fed is going to cut rates this December. So, we've got these dovish expectations and this weak data. It's creating a perfect storm. How did Wall Street react? With an absolutely full-blown rally.
I mean, Wall Street just went for it. The major indices, we're talking the S&P 500, the NASDAQ, and the Dow Jones, they all surged for a third straight day. Investors are basically celebrating the idea that easier financial conditions are just around the corner. Okay, so let's just put all the pieces together here. We've got the potential for a dovish Fed chair, we've got weak consumer data, Treasury yields are falling, and the US dollar is getting weaker. It is the absolute classic bad news is good news scenario, and it is playing out perfectly for stock investors right now. But, a weaker US dollar doesn't just exist in a vacuum, right? It sends these ripples all across the globe. And that brings us right to the foreign exchange markets.
Yeah, the fallout from this potential Fed pivot is putting just immense pressure on other central banks. And nowhere is that more obvious than with the Japanese yen.
So even with the dollar weakening against other currencies, that huge interest rate gap between the US and Japan is just keeping the yen under incredible pressure. I mean, the exchange rate is still hovering around that 156 mark, and this is really forcing Japan's policymakers into a very, very difficult corner. And this is where the policy paths just completely diverge. It's wild. While the US is over here talking about cutting rates, a former Bank of Japan official is actually suggesting the weak yen could force them to do the exact opposite, to hike rates in December. What a fascinating contrast, right?
Okay, so while all of this is happening on the big macro level, there's this whole other revolution taking place inside the tech sector itself. The very engine that's been driving so much of this rally. A massive, massive shakeup is underway in the world of AI.
So for what feels like the first time ever, OpenAI's total dominance is facing a really serious threat. Google's new AI model, Gemini 3, is getting just rave reviews. And this isn't just some minor update. Various news commentary is suggesting this is a sleeping giant finally awakening, and it could potentially change the entire competitive landscape.
And look, this battle isn't just about software. It's about the actual hardware that powers it. For years, NVIDIA's GPUs have been the undisputed king, right? No question. But now, Google's custom AI chips, their TPUs, or tensor processing units, are emerging as a major challenger. In fact, when reports came out that Meta is now considering Google's chips, wow, that sent absolute shockwaves through the market and hit NVIDIA's stock hard. And this power shift, it's creating a super clear divide, especially among Japanese component makers. On one side, we've got companies like Advanatest. They make chip testing equipment for Google, and their stock is just surging. But on the other side, a key NVIDIA supplier like Ibiden is really feeling the pressure. The market isn't waiting around, folks. It's already picking sides in this new AI war.
So with this whole Fed pivot and the AI shakeup in play, what should we be watching for next week? Let's take a quick look at the key data points on the economic calendar.
All right, looking at investing.com's economic calendar, we've got several key U.S. data points coming up this week. We'll definitely be watching initial jobless claims. That'll give us a read on the labor market. Then there's the Chicago PMI for a snapshot of manufacturing health, and of course, new home sales to see how the housing sector is doing. Any one of these could really sway the Fed's thinking as we head toward that super critical December meeting.
And all of that leaves us with one final thought. With rate cuts being priced in and a rally in full swing, the market really seems to be expecting a perfect soft landing for the economy. So the big $1 million question we're left with is, what could possibly spoil the party?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.